Where and how do I buy stocks? Which stocks should I buy? If you want to get started with investing in the stock market, you've come to the right place. I will show you some very practical and actionable steps to get going. First of all, open an online broker account. Type the search term online broker account into a search engine, select a recent search result that compares online brokers in your country, review their analysis, and decide which of the criteria is most important to you. Is it the level of commissions you pay per trade? Is it the promotional bonus you get when opening an account? Is it the minimum account balance you need to hold? Is it the access to research and news? Up to you. Before or after you have signed up with one of the online brokers, you should watch some of their tutorials on basic transactions like placing an order. Most brokers have a channel right here on YouTube. Second step is to decide how much money you want to start out with. $1,000? $10,000? $20,000? That really depends on your income and savings level. Stay on the safe side. If you lose some of the money you put in, you should still be able to pay your bills. On the other hand, put in enough money so you stay interested in investing. And if you make some gains in the stock market, you can take a loved one out for dinner. Third step, figure out what is going on in the world, short term, medium term, and long term. For example, in many countries in the world, the population is growing rapidly and needs to be fed. For example, there is a lot of geopolitical conflict in the world which could escalate. For example, a lot of people want to convert to green technology for their energy needs. Each of these themes could provide opportunities as well as risks for companies and for you as an investor. Will any of these themes dominate the stock market in the next 5 to 10 years? Did I miss a major theme? Let me know what you think in the comments below. Fourth step, get started building your portfolio. It is very exciting to place your first order, see that it get executed, and become the owner of your first stock. My personal preference is to mix individual stocks and index trackers, also called ETFs. Here are 2 ETFs that I have invested in, covering a broad range of European and US listed stocks, and an example of an individual stock that I have bought. Time will tell whether I have made the right choices. Hindsight is 20/20. Step 5. Important in stock market investing as well as life in general. Learn to be skeptical. An example is the video of a Canadian boy called Jack Chappell on how to invest in the stock market, which gets 2,000 views per day. Jack makes very bold statements like, just do all of this and you'll be fine. And this is all you really need. Being skeptical means you learn to question things, especially easy answers. Jack is 22 and has been investing for 6 years. Take a look at any major stock index and you will see that those are years of economic recovery and stock market upswings, where it's fairly easy for almost anyone to make money in the stock market. Jack writes his recommendations on a blackboard, in some cases starting off well, but then in my opinion going off the rails in the next step. For example, he mentions banks as an example of a safe investment, which I personally think is pretty hilarious if you were old enough to read a newspaper in 2008 around the collapse of Lehman Brothers. In 2017, almost 10 years later, there are still banks, for example in Italy, Spain and Greece, that need to be bailed out or heavily recapitalized, creating a major risk for equity and debt investors. Another suggestion by Jack is to stay away from tech stocks. If you had taken his advice on the day he published his video, February 25, 2016, you would have done well until July 2016, as you can see in the graph where the green line represents an information technology index, and the other 2 lines represent the Dow Jones Industrial Average and the S&P 500. However, after the summer of 2016, tech stocks have really taken off. If you had taken Jack's advice and stayed away from tech stocks, your portfolio would have underperformed. Here's one of my favorite quotes from The Economist in 2012. The secret of successful forecasting is to give a number or a date, but never both. Be skeptical. I think you should watch Jack Chappell's video and make up your own mind. I will link to his video. Please enjoy it for entertainment purposes and see if you can find any more flaws in his reasoning. Step 6. Don't be the next sucker that gets taken for a ride by people like Gordon Gekko, Jeff Skilling or Bernie Madoff. 2 of these are real people. One is a movie character. If you don't know who they are, get started right now. Your homework assignment is to watch at least the movies The Wolf of Wall Street, The Smarter Guys in the Room, and both episodes of the movie Wall Street. Trust me, it's worth the time and effort. To close off, educate yourself on the language of finance and the stock market. I have a lot of material available on the Finance Storyteller YouTube channel that can help you get a good understanding of finance terminology and how to use it. For example, I explain terms like dividend yield, gross margin and operating margin, book value versus market value of shares, and walk you through the cash flow statement of companies like Walmart. Thank you for watching. If you enjoyed this introduction to investing in the stock market, then please press the like button for me and share it with your friends. On this end screen there are a few suggestions of videos you can watch next. Please subscribe to the Finance Storyteller channel, and when doing so, please hit the bell icons so you receive automatic notifications when I post new videos. Thank you.